Wall Street is quietly killing the altcoin market. And if you're still playing last cycle strategy, you're already losing. But Wall Street isn't leaving crypto behind. They've just shifted their bets to something else entirely. And Joe McCann knows exactly where their money is flowing. Joe is a founder of Asymmetric, and last year, that fund was the best performing crypto hedge fund on the planet. Today, he's here to expose the hidden forces reshaping crypto. Insights most investors won't recognize until it's too late.
The easy money is over.
The era of predictable cycles and massive altcoin rallies is fading quickly. You can feel it. Whenever Bitcoin looks primed for a breakout, it gets slammed back down. But Joe's figured out exactly why every rally dies and what's really controlling the price action.
Why is it that every time Bitcoin just is about to break out again, it just gets smushed and trapped back into a range? And what I discovered is that
he spotted a massive shift in who controls crypto's next big move. And it's not what you think.
It won't be retail driving the alt season. It may end up, in fact, being institutions.
Joe doesn't just spot trends early. He's betting on them big. His fund famously turned $500,000 into almost $50 million, catching the BONK trade months before meme coin mania was even a thing.
I bought BONK at a $28 million market cap with $500,000. It went on to $2 billion market cap within a matter of a couple of months. And yes, that was a massive performance driver for the fund.
Today, he breaks down exactly how he finds these asymmetric trades in real time and how you can position yourself to be early when the next opportunity hits. So if you're tired of chasing yesterday's playbook and want the real inside track on what's coming next, this episode will show you exactly how one of the world's best hedge fund managers is positioning for the new rules of crypto. But guys, stay locked in because what Joe shares today will reshape how you invest in this cycle. Without further ado, let's bring Joe to the stage. Joe, let's get into it. Welcome to the channel. It's good to have you here. I'm looking forward to this today. What's happening? What's going on in our markets? We seem to be coming out of this relatively uncertain time. We had this kind of panic sell down to 98,000. We're back, and we still have some relative uncertainty. But do you think that matters anymore?
No, I mean, it's been, it's one of the more interesting years in crypto. I've been in it since 2016, and I wrote a piece at the beginning of this year on our market updates for Asymmetric, basically saying like the easy money is over. And that couldn't be further, that couldn't be more true even today. We have, I feel like at the beginning of the year, and even certainly over the past couple months, after we got through like the tariff scare, just nonstop positive headlines, right? Like even, you're seeing, I saw today Coinbase announcing they're going to have perps available for US traders on July 21st. I had the team that covers us on the institutional side at Asymmetric reach out. Are like, are you interested in this? I'm like, yes, of course. Been waiting for this for years, right? Yeah. And yet, alts, a lot of them is really bleeding out, Bitcoin and hanging in there. But it made me kind of dig in a little bit deeper as to what may be happening in the kind of market structure of crypto. Because why is it that every time Bitcoin just is about to break out again, it just gets smushed and trapped back into a range? And what I discovered is that basically since mid-December, January this year, volatility, realized vol and implied volatility has just been cratering. It's just down only. And that I anticipated would happen post Bitcoin ETFs and post Bitcoin ETF options trading. But it's happening at a very rapid pace relative to what we've seen historically with volatility in crypto. And so I anticipated it would probably take a couple of years. Maybe the banks start offering more crypto-related services to institutional and retail investors. But no, we are now seeing effectively what I'm seeing as a regime change in volatility as it relates to Bitcoin. This does not imply that we won't have, crazy 10, 20% swings in Bitcoin or something to that effect. But barring sort of big idiosyncratic changes, like, I don't know, coordinated sovereigns buying a bunch of Bitcoin, you're in these regimes where people are clipping a lot of yield just by selling volatility, even with volatility at historical lows. So, the benefit of folks like Michael Saylor and what he's done with Strategy, formerly MicroStrategy, is he's been harvesting volatility. And that has benefited MicroStrategy's or Strategy stock, MSTR, because their volatility is double Bitcoin. So if you look at like the realized volatility of Bitcoin over the past year, it's about 55% annualized. MicroStrategy is a little over 100%. And this is one of the reasons why you see a premium being applied to the stock, because it is kind of a levered play, but they're also able to harvest that volatility. And so in crypto native land, the volatilities are even lower. And so I think that this volatility.
Can you explain what that means? What is Strategy doing to, quote, harvest the volatility?
Sure. So Michael Saylor brilliantly discovered that there was this massive cohort of investors that could not buy Bitcoin directly. Mm-hmm. And that's the credit/debt markets, right? And so what he did was he created a convertible note or in debt, where he goes out to the debt markets or credit markets and says, hey, look, I'm going to pay you 0% interest, but you're going to give me debt. And within 5 years, if the price of MicroStrategy is not above your kind of conversion price, I'll pay you back your debt or whatever. But if it is above that price, you will convert your debt into MicroStrategy stock or Strategy stock. That's very much like a long call option strategy. And so what I mean by selling volatility is that instead of actually selling call options, he went to the credit markets and said, hey, loan me money. I'll give you a 5-year way out of the money call option. So he's collecting money by selling that volatility in the future. And the bond markets or debt markets are just like chewing this thing up. And so his ability to harvest that volatility enables him to immediately go buy more Bitcoin and improve his Bitcoin per share. Yeah. That then leads to the stock price obviously moving much more, I would say, violently than the underlying asset, which is basically Bitcoin. So that harvesting volatility model is now attempting to be replicated by a number of other companies, but he pretty much invented that technique of going to the debt markets, selling them effectively what is a way out in the future, out of the money call option, and collecting the premium for selling them that volatility, and then subsequently buying more Bitcoin.
Do you think that that these Bitcoin treasury companies, they would be in a lot of danger if we had a, say, 60, 80% price correction in Bitcoin? Like, are they using leverage in a way that most people are familiar with leverage, to where they would have to unwind and sell their Bitcoin off, and that would create a massive cascade, and that would be the new FTX essentially?
So, I mean, the short answer is anything's possible. I think it's very treasury company specific as well. So, the balance sheet of something like Metaplanet in Japan will be very different than something like Strategy, very different than something like, Pomp's new SPAC that he's doing. Mm-hmm. And I think there's an important thing to understand, especially for the crypto native, degens, if you will, if you've been in the space for a while. Leverage that we've typically engaged with is leverage on BitMEX or leverage on Binance or leverage on FTX. Leverage is very different in, say, the public markets and capital markets, where leverage is, debt on your balance sheets, right? So if the majority of your balance sheet is debt, meaning you got to pay this back at some point, yeah, you probably don't want the asset that you own to drop 80, 90% or 50, 60% or whatever that number is. I think the thing to consider is, are the companies that are following the Michael Saylor strategy of, going to the debt markets and then buying additional Bitcoin, how levered are they? How much debt are they actually taking on? And how does that relate to their kind of Bitcoin per share price, as well as what's called their MNAV, or the multiple of their net asset value, right? And an MNAV, at a high level, like, assume a company has $10 billion worth of Bitcoin. if their market cap is 10 billion, the MNAV is what? 1.0. But if they have $10 billion worth of Bitcoin and their market cap is 20 billion, that's a 2x MNAV. As an example, Strategy is about a 1.8 MNAV right now. So I think there's ways of tracking, looking at people's MNAVs as well as the amount of debt that they're actually taking on. And at what threshold would you end up seeing this kind of cascading event? I will say though that, I mentioned this even before Michael Saylor's approach became, well known and is now being kind of adopted, that when you have folks like BlackRock and Fidelity and others, but ultimately BlackRock, the largest asset manager in the world, buying up their own ETF for their various funds, there are going to be levels where they just buy. Furthermore, if you start to see ETFs start to get added into other index-related products or 401ks and whatnot, there's going to be more of these kind of passive or persistent bids. And you can also assume that when you start to see a level of volatility being dampened in Bitcoin in general, I mean, we're seeing it right now on Deribit. If you try to go trade at the money options, they're like low 30s, which is less than a lot of stocks in the S&P 500, right? It's more difficult to see what we have had, the PTSD from when, the BitMEX liquidation engine was failing in 2020. I think those days are very much behind us. You would have to have something so catastrophic that honestly, if Bitcoin is crashing 70, 80%, I think we actually have bigger issues.
Okay. So that's, so do you think that we've kind of hit this, I guess the best word to describe it might be escape velocity of the kind of very volatile days of Bitcoin, to where we probably likely, unless it's maybe some sort of black swan, I don't know, a nuke drops in New York or something like that, like we're probably maybe not going to see these same kind of corrections that we've seen historically, at least not in Bitcoin.
Yeah, and I mean, you don't even have to take my word for it. You can just look at the numbers, right? If you just go and look at, say, the realized volatility, and let me just quickly explain the difference between the two. Realized volatility is what you actually see in the price action, right? Implied volatility is what the options markets are assuming the future volatility is going to be. And I mean, we just went through Iran being bombed by Israel, and then subsequently the United States, and realized volatility for Bitcoin basically went down. I mean, it's just, if you would have asked me, or if somebody would have asked you 3-4 years ago, hey, if Israel goes and bombs Iran, what do you think happens to the price of Bitcoin? Your answer is probably it's down 50%, right? Or it's up 50%. Maybe people are like, it's a flight to quality. The point is that it should move in a very volatile manner. We had the complete and utter opposite happen, right? And so what I'm suggesting is that you don't even have to believe me. You can just look at the numbers and say, the idea that Bitcoin crashes 40 or 50% in a day feels like the markets are just pricing that out. It is not to say it could not happen, right? Like you just have to look at these things as like a distribution of potential outcomes. And the idea that, you can go buy a $50,000 put option on Bitcoin right now, but in the distribution of outcomes, it's like less than 1%. Yeah. It could still happen. And if it does, you will make a fortune. But the markets are basically telling you that the odds of a move like this are so incredibly low that, I'll sell you that option all day long because it's basically never going to happen.
Yeah. I mean, a lot of times when I talk to people about Bitcoin and, they express they have volatility concerns about it. And, it's one of the things that makes it so appealing to us right now is the volatility, and how, we still see it as very early days from an adoption perspective, and we still have a lot of potential price appreciation before it becomes more mellow, something like gold or something like that. And I always kind of thought that, once it gets to $1 million or $5 million or whatever the number is, of when it's kind of already been globally adopted by folks who want to hold it, then we would see this very low volatility and very boring type of Bitcoin market. But I don't know that we're there yet. So, like you said before, with all of this great news, but Bitcoin just is like, it's that like meme, poke it with a stick, like do something, it's like,
Yeah.
why do we have all this amazing news? Well, all these, we've got now, 250 companies holding Bitcoin on their balance sheet, I think it's 160 publicly traded ones or something like that. Every day we get this new news, but yet we're still chilling at like 107 or whatever the number is. So what is it going to take for, what is it going to take? And is that going to be US buying and like accumulating, and that might be a chain reaction, or is it something else?
Yeah, well, I mean, the interesting thing, my view is you actually kind of answered your own question. And you mentioned the public markets. And so, what is it going to take to get Bitcoin to 200,000 or whatever, right? Doubling from here, et cetera, et cetera. And I've never really been a huge fan of price targets because they're really just a number, but they do make great headlines. Like, don't get me wrong. The thing I think people should understand is that as institutions start adopting Bitcoin, so start with the ETFs, and then there's the options that you can trade, and now there's of course these treasury companies, the banks and the kind of ETF issuers and hedge funds that are in TradFi, et cetera. If you give them an opportunity to make 10, 12% annualized, make 12% in a year, all you got to do is hold Bitcoin and sell like a future or sell a call option or whatever, and do it in monster size. They will do this all day long. Bitcoin has provided for a long time, pardon the pun, asymmetric upside, because you didn't necessarily have these, what we would consider volatility sellers, people that are just trying to clip yield. They're just trying to clip some percentage of return. And what we're seeing on the institutional side of like crypto, run a fund, what we've noticed is that every time Bitcoin is trying to break out, all of a sudden these call sellers, they're just like, oh, Bitcoin moved 10% in a few days, sell a ton of calls, because when you sell a call, you collect premium. You bring that premium in. Well, mechanically, what ends up happening in the markets is that if someone is selling a call, that means someone on the other side is buying, which is usually a broker dealer, which means when they're buying it, they have to sell spot to delta hedge their position because they need to remain, directionally neutral, right? And
are you talking about like would the CME carry basis trade be?
That's one of them, exactly. Yeah, so like the CME basis trade is a perfect example of why I think that Bitcoin is not just moving, just constantly moving higher and higher and higher. Because if say there's a hedge fund out there, they got a few $1 billion under management, TradFi, and they're like, wait a second, if I can earn like 10% annualized on just like buying spot and shorting the future, they will do that in massive size until the kind of the spread collapses or the annualized gain collapses. The CME basis trade is at like 1% right now. Like that, like no one is even interested in that trade anymore. And a lot of it has to do where the other yield clipping is coming from. And a lot of the yield clipping is coming from, buying Bybit and selling calls against it. Now you could imagine if you just go check Bybit's trading volume, I mean, there's billions and billions of dollars a day of Bybit trading volume. And that also implies there's a lot of people selling calls to clip little bits of carry against it. And so if you're from crypto, 12% a year sounds like a joke. Like that's like 5 minutes, right? Like, right? But in TradFi, it's huge. And I think that distinction needs to be understood, as well as how it relates to these treasury companies, right? So a lot of these treasury companies, their stock prices are incredibly volatile, right? Part of the reason is they're companies that you've never heard of that have what's called an RTO. It stands for reverse takeover. Somebody comes in and says, hey, we're going to get a shareholders to vote, or we're going to buy up all your shares and issue new shares, and then go buy $500 million worth of Bitcoin or whatever it actually is. The stock price jumps a ton, and then the new shares are registered with the SEC, and then the stock drops, and then it's like all over the place, right? If you look at a lot of these treasury companies today that have done these RTOs, they look like shitcoins of 4 years ago. It's the same thing, right? And I think that this is the key thing to understand is that the volatility actually never goes away. It just gets transferred somewhere else. And so believe it or not, us crypto native folks that just want to be long Bitcoin and Solana and Ethereum and whatever else it is, we're not getting the kind of realized volatility that we have expected and have been accustomed to for so long. And ironically, it's happening in the public markets via these companies that now hold crypto on their balance sheet. And so the true irony here is that if you have been stomaching volatility, you've been in crypto a long time, you've been stomaching volatility for a decade or whatever, like the volatility is mostly gone for the most part, and yet it's back in TradFi.
I want to get into kind of the Joe McCann thesis, right? So you run this fund, right, asymmetric, and from what I understand, you've got both Hedge and the VC arm to it.
Yep.
And in 2023 to 2024, you had a really good run. From what I understand, best performing hedge fund of the year. And I think a lot of those gains were done from meme coins and BONK, right? I mean, you came from Wall Street also, right? So do you have LPs in your fund?
Yeah.
And how did you go explain to them that you're buying this shit coin? With what was it? How much money did you put into BONK at 40?
Well, okay, so yeah, let me explain. So at the time, right, the hedge fund was only like $20 million under management, right? This was like late 2023. And we have what's called a concentration risk policy, where if a token that we want to buy is not in the top 20 by market cap, the maximum we can buy is 2% of the fund's assets under management. Well, that's $500,000, right? Mm-hmm. But I bought BONK at a $28 million market cap with $500,000. It went on to $2 billion market cap within a matter of a couple of months. And yes, that was a massive performance driver for the fund. We were also long Solana and some Bitcoin, but no question, the BONK run was part and parcel to our success as being number one that year. How do I explain that to LPs? Well, this is the best part, right?
You didn't have to, actually. You didn't have to, and you show them the return, and they don't care at that point. Yeah.
You know what LPs want? They want you to make them money, right? Yeah. And so, and by the way, that was a time when we had a lot of volatility in crypto. 2023. This is when Solana, finally broke out from the FTX low and went on a run from $20 ish all the way, I don't know, 100 plus, whatever it was, in a matter of weeks. And Bitcoin was starting to rip a little bit again, and of course BONK and other Solana related tokens, which I've been involved in Solana since 2019. Anatoly and Raj, the founders or LPs in my fund, are super close friends. Like I'm a huge investor in the ecosystem, et cetera, et cetera, et cetera. And so that's the best part, is that it was a highly volatile environment at the time, which the strategy at my fund benefits from high volatility, because we want to be long volatility when it's cheap and short volatility when it's expensive. But also having a pulse on internet culture and understanding at least what I saw back in late 2023, that like meme coins are going to be a thing.
Yeah,
and they're going to be on Solana, and this is the first one that should really explode. And it did. It kicked off basically meme coin super cycle or meme coin season or whatever you want to call it in 2024. And that has carried into, even today with this year with the president of the United States launching a meme coin on Solana, right? Now, when I wrote my thesis back in, October or November of 2023, I did not anticipate a president launching their own meme coin. But it really did validate the view that I had, but it also kind of marked an end to that chapter of meme coins. And I get the question a lot of like, well, are meme coins over? And I'm like, no, there's always going to be some new iteration of meme coins and speculative mania that has to do with some new innovative thing, right? Like before Pump.Fun, you kind of really had to know how to code to launch a meme coin. Yeah. Well, then they just said, you don't even have to learn how to code. Here's click, code, bunch it. And it just changed the landscape entirely for meme coins. Well, what's that next thing going to be? No idea. And I think that this is why it's important to still keep a pulse on it. But that trade is over, right? That being able to identify that early and have a lot of conviction, but also manage the risk around it. Remember, 2%, that's all that I put in. When you're right, you can make a fortune. And if you're wrong, you maybe lose half your money or something to that effect. And again, in that scenario, the LPs won't be upset. Did
you exit that whole position?
Yeah, well, of course, like we rotated, right? Like, personally, I still have the massive BONK position. Like, I don't think I'm ever really going to sell my BONK position. The team is just in my opinion, they're the hardest working and one of the most prolific teams in all of crypto. And they're meme coin, right? Like they're not a startup, they're not a company. They're arguably the most well-known team in Solana, hands down, and potentially in other areas of crypto. But as a fund manager, remember, my job is to make my LPs returns.
Exactly, and so, that's where I was going with the question. And for the audience's sake, a lot of people have the, myself included, we round trip a lot, right? And so, as somebody who manages risk and manages other people's money, runs a professional hedge fund, how do you know when something's running so hard and you're like, you're looking at your gains and you're like, man, this thing's a nonstop. It's at $1 billion. It's $2 billion. This thing's going to 50 billion, and you just don't want to sell because you're looking at like all the things you can buy in the future with the potential gains. If you just hold a little longer, right? Then you have a little correction and you're like, it's just a little correction. It's going to go back up because it did before, right? And then next thing you know, you're down 80% or whatever, and you round trip the whole thing. You're sitting there going, what the fuck? Why didn't I sell when it was, 100x?
Totally. I mean, the only way that I can explain this is I've been trading for 25 years. And people ask me like, how do you know when to sell? Or like, how do you control your emotions? And I'm like, look, this is the truth. Whether, your audience wants to believe me or not, this is the absolute truth. Because this is literally me. And like, look at me now. You have to you start trading, think you know what you're doing, and then you blow up your account. Okay, it happens one time, right? And it hurts. Like it could be $100, it could be $100,000. It doesn't matter what the number is. It's just like, oh man, that gut feeling is just awful. And so then you're like, all right, I'm gonna be more disciplined. I'm gonna take profits, or I'm gonna cut my losses. And you start to like work your way back up for your second run at it. And then you have to blow up again. Then you're ready. Because typically after that second time your account has blown up, and this could be stocks, foreign exchange, crypto, it doesn't matter what you're trading. It's the feeling that you get the second time that you either determine like, fuck this isn't for me, or actually, I really need to change my mindset so that I never have this feeling again. Mm-hmm. And it's really hard to do. It's very hard to do because in a lot of cases, most people get caught up in the euphoria of this thing's it's at 2 billion, it's going to 50 billion, right? Or whatever. Or, oh my God, Solana's down 97% from its all-time high. It's trading $8. I'm just going to throw in the towel. You have to do the opposite every time. It doesn't matter if at the fund level, if I would have, if I would have held on to the position and thought that it was going to go to 50 billion and it didn't, I didn't do my job as a fund manager. Now, if I took all the profits, I didn't take all the profits at one time, but if I took all the profits at like say $2 billion market cap, and it went to 10 billion, doesn't matter. Trade is over. You treat it as a trade, right? So I think the key is to also understand that, are you investing or are you trading, right? So like my Bitcoin that I own, I don't touch it. It's just like part of my portfolio, or like my houses, like I don't sell them and flip them. Now, some people flip houses, which is great. I just hold on to them.
Yeah.
But there are things that I will trade, right? And so if you're trading, never get married to a trade, ever. Because I'm telling you right now, I'm wrong all the time. It's just that when I'm right, it's usually really right. And that's what I think, like building that skill just comes with time and patience and understanding how to manage your risk, but most importantly, how to manage your emotions.
Really good advice. I want to shift over to altcoins, and I'm going to just tell you a little bit about, I'm just going to ramble for a second, and then I'll let you kind of just pick whatever part of this discussion that you want to start with first. But we've had this brutal, we've had little bits of period of time, the last 3.5 years, where we've seen these isolated niche kind of bull runs, right? Where we had this whiff and bonk and, these kind of the fart coin and
hyper liquid, right? Yeah.
Hyper liquid, insane. But overall, altcoins have been bleeding and hemorrhaging. Those of us who come from the VC world, we've parked so much capital in the market since 2021. And these investments have either died by now or they're waiting for a better market to launch while hibernating and just hanging on to every last dollar they have for their runway and trying to figure out where they're going to pay for the rent. And it's just like, it's been brutal. I want to know, do you think that the altcoin seasons that we've had in the past, historically, 2021, 2017, we're going to see similar types of altcoin season, or has the game fundamentally changed? Let's start with that, and then I'm going to move on to something that I saw on your X account recently, which I'm very curious about.
Sure. So yes, even though I am a true crypto fan and participant, I've been saying this all year. I hate to break the news to you guys, but there's not going to be an alt season. And no one likes that guy, right? It's like the guy that bets the don't pass line at the craps table or something, you know? The reason I say this is not because, I mean, I hold alts. I have a VC fund that has alts, right? Like, I just don't see it happening, certainly this year, because mostly the institutional bid behind Bitcoin is so strong that there's very little interest currently. This might change with like the Solana ETFs coming, and you know, I saw there's a Luca over at Pudgy Penguins has an ETF, and like Aptos and Dogecoin. So that might change things. I don't know, right? But the majority of the money coming into the space right now is from the institutions, right? And a lot of this is Michael Saylor and Strategy and these other corporate treasuries and then BlackRock, et cetera. If you look at like pure retail dollars or money, okay, coming into crypto, in the last bull market run, the retail investors, you know, you had a 0% interest rate environment. You had COVID stimulus checks. You had people sitting on their phones all day, couldn't go outside or do things or whatever. We have a very different macro environment. We have, you know, 4.5% interest rates, and we don't have free money. And, you know, there's all these tariff and inflation scares, et cetera. But more importantly, back then, you had, if you were an American, right, and that's where a lot of the retail money came from, even though Southeast Asia definitely big influence. But in America, if you were going to buy alts, you went to Coinbase or you went to Robinhood. And they have whether you like it or not, certainly back then, a relatively curated list of things that you could buy, right? And that, of course, would bleed over into other parts of the altcoin market. But for the most part, I mean, this is why you saw Dogecoin run up to what it did in 2021. You know, $85 billion market cap is crazy, right? But look at where the money was coming from. It was coming from retail into Robinhood and into Coinbase, et cetera. Well, today, yes, we have more exchanges. Great. We invested in a company called Cube that's an exchange. You know, Kraken's out there, Gemini, you know, Bybit, OKX, et cetera, right? And a lot of these folks now have, you know, US shops as well. But the biggest difference this time is, believe it or not, all these damn meme coins. Yeah. Because what the media loves to do is highlight, you know, 19-year-old kid puts $800 into WIF and makes $2 million. You know what that is? That's a lottery ticket. And so retail is going, I want to be that next guy that puts a few $100s into some random dog coin and it goes up a zillion %. So how many meme coins are there? I don't know, 25,000 new ones a day. Yeah. So as an end user, if you can access these types of meme coins, which you can, there's Jupiter has a mobile, you know, phone app, Spot, which is a company I'm an investor and advisor in. It's pure meme coin trading. Like, there's myriad ways to just get access to meme coins. That restricts some of the retail dollars that could flow into the alts of last cycle, or even the alts that are like legitimate, right? Like, you know, things that are driving real utility, like Jito and Athena and these types of things, right? So long story longer, until there is a structural change in terms of how retail is putting their focus into alts versus meme coins, it's going to struggle. Now, here's the silver lining, which I don't know if this will happen anytime soon, but I do feel that there is an opportunity for the institutions, believe it or not, to start creating these baskets or, you know, indice-based products as ETFs or otherwise that bundle up a bunch of these altcoins. Now, again, it'll be depending on, do you own this altcoin or not? But believe it or not, I think institutions, remember, ETF issuers, they're in a fee business. All they want to do is, create as much of these ETFs as they can, and they just clip like 20, 30 basis points or 40 basis points or whatever it is. So if it's random shitcoin XYZ, but there's a lot of on-chain trading volume, they'll create an ETF for it, right? Or if they want to create like a, I don't know, Solana infrastructure ETF index and make an ETF of that, and they can clip fees on it, they'll do that. And so this is why I think like the irony being that it won't be retail driving the alt season. It may end up, in fact, being institutions.
Do you think that shifts on a couple factors? One, well, this is also going to have to be based on, do you believe that we have a 4-year cycle or not anymore? But, let's say that we start to get the first rate cuts in September, and let's say that we do get, we do head down over the next 12 to 18 months with much, much more favorable interest rates. Let's say we go back to that, low environment again, similar to 2021. And based on what you said before, blowing up your portfolio a couple of times, that lottery ticket, the odds of winning the lotto are really bad, right?
Yep.
And, at first, I don't know if people need to blow up their portfolio 2 times or 20 times, but eventually, I think they get sick of playing the meme coin game. Yep. I just don't know if that carrot, dangling that carrot in front of them, that lottery ticket is too sweet for people to get off that gambling addiction and refocus attention back to quality alts.
Yeah, I mean, it's a great question, right? And I don't know. What I do know is that speculation has been around from day one in human history and is never going to go away. And I think that as, look, like whether people like to take your like moral argument aside, not yours, but somebody's moral argument aside, prediction markets are a thing, right? Kalshi and Polymarket, or they raised like $2 billion valuations recently, right?
Mm-hmm.
Why? Because they're having $1 billion a month in trading volume in random outcomes of events, right? People are betting and speculating on these things. Why is it that DraftKings and FanDuel are having like huge double-digit compound annual growth rates? People are gambling on sports, whether you like it or not. And so meme coins is yet another form of that speculation. And so, yes, on the one hand, I do agree that the kind of crypto degen folks that might be getting burned out on the lottery ticket game may want to focus elsewhere. I think that's a healthy thing to do because the reality is in your portfolio, you should have some exposure to meme coins, right? Just like I did at Asymmetric, 2% of our AUM was in this meme coin. Well, it generated like 50% of the return, right? The same type of thing should be the case in your portfolio. And this is not financial advice, of course, but what I'm suggesting is that if, crypto Twitter has all these amazing like lore and narratives and memes and vernacular, like full port. I'm full porting into this. Yeah. And it's like, that might sound cool, but it's really fucking stupid.
Yeah.
You shouldn't do that. If you want to actually build wealth or you want to actually make money investing in crypto or frankly anything, you should never full port anything. I get why it's cool and it's fun and it's, exciting and a thing to say that like gets the people going. It's a dumb idea in practice. And so as you balance out that portfolio, having exposure to meme coins, having exposure to high quality alts like Bitcoin, Ethereum, Solana, Hyperliquid, these types of things, that will provide you with the buffer. So like, the volatility in Bitcoin is really starting to go down, but hey, meme coins volatility is turbo. So maybe have a little less of your exposure there, but still have some.
On your X account, I was just looking recently, I don't know if it was today or yesterday, you made some post about investing and VC funds investing in the defense industry. Recently, probably because of just the, I don't know, maybe it's apathy, maybe it's just the fact that, we've, like I said before, we've made all these investments and it's taking a while to turn them around. A lot of them have died. I still make investments in VC companies and crypto companies today, but there's a lot of really interesting new technology evolving right now that is moving at light speed. Look at Figure AI, right? It did a 40x valuation overnight when it got the BMW deal. You've got all of this innovation happening out of Washington with these executive orders, ripping off red tape and making it easier for things like nuclear, AI, robotics, supersonic commercial travel, all this really cool, fascinating stuff.
Quantum,
defense industry, quantum. This is all amazing. And it's exciting. I mean, I've in my entire decade or so of being an investor, I haven't really looked at these other industries so far. You haven't seen these kind of, as far as I'm aware, but I've been also very laser focused in the crypto industry. But it just hasn't. It doesn't seem like you get many of these opportunities. But right now, it seems like they're kind of everywhere. Are you shifting attention somewhat into looking to invest in more traditional equity companies in these kind of evolving tech spaces?
Personally, yes. So believe it or not, a close friend of mine that I've known in crypto for many years, he has a military background, really smart investor. We didn't work at the same time at this hedge fund in San Francisco years ago, but he had worked there before I did. And he launched a defense tech VC fund. And I am an LP in that fund because I come from a military family. My grandfather stormed the beaches of Normandy in World War II. I have a lot of respect for what the military does. But more importantly, I am elated that the bureaucratic nightmare of incumbency that has granted folks like Raytheon and Boeing and Northrop Grumman basically an oligopoly on defense in the United States is just going away. Because I think, irrespective of one's politics, having a pro-innovation government at the United States federal level is good for the country, right? Yeah. Pro-innovation on AI, pro-innovation on nuclear, pro-innovation on quantum, pro-innovation on crypto, pro-innovation on defense. And as it relates to defense, you're already seeing, yes, everybody's familiar with Palantir, right?
Yes.
But and then most people are familiar with Anduril. But there's a slew of other companies out there that are being formed today that, given, I think, the administration's posture around innovation and defense, you will start to see the ability for companies to really thrive in innovation for defense. The reason that the tweet that I had posted came from the discussion with President Trump and NATO having a 5% of GDP spend associated with NATO and the countries underneath NATO. That's a huge number.
Yeah.
like massive, massive number. And so I am obviously an investor in a defense tech fund, am pro that movement because, yes, I'm an investor, but more importantly, I am not pro people dying and being killed in wars. And so, yes, is conflict going to exist going forward? Yes. But if we could develop technologies that reduce the impact on, human lives and casualties, I am all for that. I'm also all for protecting the interest of the United States and our allies. You need innovation to do that. And so I do think that the setup of the current administration is enabling not only defense tech, but things like nuclear, things like quantum, and things like crypto and AI to really thrive and enable the United States to continue to lead in those areas. But the world, I hope, will benefit from it as well.
Yeah, those areas are very exciting to me. I'm starting to look at it. I mean, even I don't know if you saw Colossal Biosciences, but how wild is that shit? I mean,
what is that?
So they figured out how to de-extinct species. Talk about
right. The woolly mammoth or something, right?
Yeah, and the dire wolf, real life Jurassic Park shit happening right now. And I was just having, I use ChatGPT 03 Pro model now for all my due diligence on things. It's just the most brilliant thing to. I became an expert on small modular reactors for nuclear in 2 days, just having an intense conversation with this model. It's amazing, amazing. Yeah. Anyone watching, you guys make sure this is the way you do due diligence today. It's unbelievable. But yeah, like they're de-extincting species. I don't know when they're going to do a dinosaur, but like they'll probably do it at some point. But that deal is happening on private markets right now. I think it's fascinating. But another one of your theses is, and this is kind of where I fall too, is that we have a fairly saturated infrastructure market right now. Not only is it saturated, but like our infrastructure just works really well today, right? The SUI, Aptos, Solana, they're great. Like, do we really need a faster, smarter, more secure blockchain? Like, probably not. Like, I mean, these things are evolving really well. I know, like, Solana's had its bumps and stuff like that, but like, they're, when you look at Raj and Tolly, they're just hyper folk. Like, I saw Raj, he's here in Austin at a birthday recently, and like, I was just like, hey man, like, congratulations on all the success you've had so far, phenomenal, right? And he's like, but we're nowhere near done. We're no, and that I see that from Tolly too. They're just nowhere, not at all satisfied with the level that they're at right now, which is really driven and dedicated founders.
Yep.
But the point is that, like, I don't know that I would go hard into investing in another like layer one or something like that, right? Maybe middleware, things that like they bring these things together, something like that. But your thesis is quite similar to mine, where like maybe it's time for applications to evolve. What do you like? Tell me more about that.
Yeah, sure. So, one, I'm close friends with Raj and Tolly as well, and we all share the Mamba mentality. The job's not finished, and I completely agree. And even though I've been a staunch evangelist, supporter, investor, etc., in Solana and the broader Solana ecosystem for years, it really stems from the mission. Right? Initially they wanted to be, the NASDAQ on blockchain, right? They wanted to be super fast. And that has enabled a lot of innovation beyond just trading and value exchange, which I think is incredibly valuable and awesome and all that, whether it's meme coins, NFTs, video games, you name it, right? Do we need multiple other layer ones? I think the obvious answer is no, but that's not going to change the fact that people will always try, right? And so I've been a software developer for 25 years. I've been in open source for 17 years. I've been, if you take just like the JavaScript programming language community, there's always a new JavaScript framework that comes out. It's never like, this one's great. This one just works. And like everybody uses it. And like, there's always going to be somebody's engineering itch to make it better or different, right? Or serve a different purpose. And so this is clouded, I think, by the VC community. And I'm a VC, right? I think a lot of VCs made a lot of money in last cycle spraying and praying into every L1. And hats off to you. I'm not upset, but that trade is over. I don't think that everybody chasing the same trade that worked years ago is going to work again. Now, I'm friends with Mo, founder of Aptos. He's former CEO, founder of Aptos. I'm friends with the guys over at SWE. I think they're brilliant. A lot of the stuff that both of those teams are doing is great. I just see today Solana being the fastest horse. And then if you look, and I won't get too technical, but if you look at the latest upgrade with Alpenglow that's coming for Solana, we're talking about the speed of light is no longer the bottleneck, right? We're talking 100 to 150 millisecond finality times. This is like wizardry that's way beyond my software engineering capabilities. It's probably why I'm a fund manager and CEO. But when that happens, and it's happening, if you check the GitHub repos, it's coming, and there's a lot of tests that are being run to ensure that this is real. You basically have Web 2 level capabilities with Web 3 technology. And so from my perspective, I am obviously biased, but I am yet to see a reason to change my view. I see Bitcoin as the ultimate digital asset to hold. It is the asset. Solana is the infrastructure. It is the infrastructure that is good enough for the president of the United States to launch a meme coin on a weekend when no one was trading and the chain hummed along. It was the biggest test of a blockchain network in the history of blockchain. And so as 5.5 billion people around on Earth that access the internet every day, start to use things like stablecoins, start to trade tokenized stocks, or just send payments to each other, they're going to be doing that on Solana and they won't even know it. And so from my perspective, it's more important to invest in continuing to broaden out and grow the Solana ecosystem. I'm speaking for myself specifically here, but B, also empower and invest in those that are building applications on top of that infrastructure. So for example, we've seen this movie before. In the mid to late 1990s, the venture capital community was investing in the physical infrastructure for the internet. So literally cables and servers and stuff like that, right? 10 years later, they weren't. Do you know what they were investing in? Instagram, Facebook, Groupon, Square, like these types of Venmo, these types of, internet Web 2 specific applications. They weren't investing in Cisco and Nortel anymore. Those trades were over. I think we're having that moment now, especially given the regulatory tailwinds in the US. And so I'm looking for, doubling, tripling down on the Solana ecosystem. And in doing so, also looking for those applications higher up the stack that are going to enable people to utilize this underlying infrastructure that, in my opinion, Solana has won.
We got a lot of different types of DApp, applications, right? Decentralized applications. I mean, everything from the idea of what was like the more purist perspective before of trying to decentralize every legacy incumbent out there, whether it was Airbnb or Uber. And then you have DeFi applications and you've got derivatives platforms and you've got all these things. Where are you looking right now? What kind of applications do you think are going to be, the next hot thing or the first thing to really take off over the next 12 months?
Yeah, I mean, it's tough, right? Because what we're looking for are things that have never been invented before, right? That being said, I think that if you look at certain almost like verticals, you can start to identify some key things. So on the one hand, maybe there's an interesting way of accessing media or publishing that utilizes blockchain, right? And I'm not talking about like the provenance associated with like, this is the official video. Maybe there's a new way of doing things, right?
Yeah.
So media and entertainment, call it pop culture, if you will, in some context, someone is going to invent or innovate in that space. That's going to be a breakout application. Converse, on the other side, like you could look at sports, right? So I am an investor and advisor to this company called Golfin, where you literally get paid to play golf. And there's a token involved, and it's running on Solana, but you don't even know. If you've never done anything with crypto, and you're a golf fan, and you love playing golf, you get paid tokens to play golf. You check in at golf courses, you keep your score, you do these types of things, and then you can spend these tokens for real world objects like tee times at golf clubs and literal golf clubs, or maybe it's like you get to go to Top Golf and get a drink or whatever the thing may be, right? I'm not a golfer, so not my forte. The point is that the infrastructure behind all of that is abstracted away from the user. You're not entering a seed phrase and doing all this stuff. And that's what my point is that, no one logs into Instagram and is like, are they using a MySQL or a NoSQL database? Like no one cares, right? They just want an awesome experience. That's why I'm suggesting that the Solana infrastructure today is good enough to start enabling those types of applications that we saw in Web 2, but are going to be coming for Web 3.
All right, Joe, I know we got to go, but of course, for the clicks, by the end of the year, what's the price of Bitcoin? What's the price of Solana?
Bitcoin end of the year, I'm going to go with 200K.
Okay.
And Solana, I'm going to say 420.
Perfect. Elon will be proud. Joe, thanks so much for coming on, man. I learned a lot. Have a great day.
All right. Thanks so much.
Bye-bye.